Hello traders and welcome to another video review. Today is Friday, July 22nd, 2022. Let's take a look at the Forex calendar, of course, at the beginning of our review. What do we have here? Some data had been published overnight, especially from Japan, where the CPI was a little bit worse than expected. National CPI was released at the level of 2.2%, while the previous reading was 2.1%, and the services PMI was worse than expected, 51.2 versus 54. During the London session, we will have the core retail sales from the UK, of course, and the retail sales data. The retail sales data are expected to increase from minus 0.5% to minus 0.3%. The same situation is with the German data. German manufacturing PMI is expected to decrease from 52 points to 50.6 point, and the services PMI from 52.4 to 51.2. Of course, manufacturing PMI and the services PMI will be released from the Eurozone as well at 10 o'clock. Moreover, at 10:30 we got composite PMI and manufacturing PMI together with the services PMI. All of these PMIs are scheduled for release from UK at 10:30. During the New York session, we got core retail sales and the retail sales data scheduled for release from Canada 2:30, and later on we got manufacturing PMI, market composite PMI, and the services PMI data from the US scheduled for release at 3:45. Of course, this is the last important data for today, so let's just jump straight on to the charts. Plenty of data to be released from the UK, so let's see what is cable doing. And as you can see, just recently the cable started to bounce towards 1.235. However, it was capped, and for the last few days the bulls can't close above this level, which means we will more likely see another decline on the British pound towards the level of 1.1760, because there is of course the low from the 14th of the July, so this is the apparently last week low is still the target for the bears, as long as we trade below this short-term trend line. So the outlook remains bearish unless the data from the manufacturing PMI, composite PMI, and the services PMI will definitely beat the expectations, right? So unless this happens, then the outlook remains bearish, and this would be only some sort of a bounce. As you can see, the price range for this bounce is not really big. It's only about 2.33%, so this bounce is very little, and the momentum is still below the level of 50, so the bears has the control on the British pound still on. We got some data from the Eurozone, so let's take a look at the euro dollar. Euro dollar is in a very similar situation as the British pound, because we can see here bearish pressure around 50% of the Fibonacci retracement, 1.0282. For the last few days we got long upper wicks on the daily candles, so that means of course the price is being moved lower. At least the best try to move the price lower. So what we need is some sort of the pullback towards the level of 1.0076, and then maybe the wave C will be made here to the upside. So the overall correction would look like this. This will be wave A, wave B, and maybe wave C to the 61%. This is of course very optimistic scenario for the euro, because in this situation we have a very nice ABC corrective pattern done towards 1.0361. If however this pattern is invalidated, which means that the low of the wave B will be below the level of 1, the parity level. That means the bearish pressure is still high, and we can easily take out the low from the last week at 9,953. So that's the euro dollar outlook. Let me just take a look now on the US dollar to the Canadian dollar. And this is a daily time frame chart of the US dollar to the Canadian dollar, and it looks very interesting, because we got very similar situation to the euro. What I mean is that after this big engulfing pattern done at 1.3221, the situation is in favor of a bears, basically. Why? Because for the last few days we got a drop. The market tried to rally towards 129.47. It didn't make it. So right now I think we will change now this level from the support to the resistance, and now it will be resistance for the bulls. Today, after the data, we might test 1.2820. And then if we break, there is plenty of room towards the level of 1.2520. So please keep an eye on this situation here. As you can see, this is still a market that makes higher and higher lows. However, in the recent days, there is not much dynamic after the cup and a handle pattern was made, right? So it means that something else is going on the US dollar to the Canadian dollar. Something else is going on this chart, and we might see a move to the downside soon. Let's take a look on the SP 500. Right, so the S&P 500 daily time frame chart is under the bullish control. We broke above the 3,948. We stayed in this consolidation since the end of the June. Finally, we broke above it. So this scenario is invalidated, and now the market is heading towards the key supply zone located between 4,114, 4,180. If we break above this supply zone, then of course the next leg to the upside is possible. However, as long as we trade below this level, then of course there is still bearish outlook for the S&P 500 in the next coming days, right? So this is the key supply zone on the S&P 500. And last but not least, let's take a look what is going on the spot gold market. Gold is going down as a stone, because as you can see right now, we are approaching the levels from 2021. Those levels are 1,676, 1,686, and it looks like the market wants to test it. We almost hit the 1,676, but the extremely oversold market conditions makes this market very susceptible to the bounce, and this is what's happened. As you can see here, we have a bullish engulfing pattern on the daily time frame chart. So right now the market tries to rally higher, tries to move a little bit up from the extremely oversold market condition, testing the yearly lows. 1,722 is the nearest technical resistance, then 1,753, and of course the key technical resistance still present on the chart, which is the area between 1,780 1,787. Only a breakout above this zone would change the outlook from bearish to bullish, but now temporary bounce is being expected towards the higher levels. That's everything from me for today. Thank you very much for watching this analysis, and I hope I see you guys next time. So take care and bye bye.